The tax system is not always the easiest to understand. Having a great tax advisor, having somebody who can partner with you and help you to understand the tax code and all the ways in which you can pay the legal minimum is important. Today's episode, I feature a husband and wife team who are fabulous at helping, in particular, real estate professionals to take advantage of the appropriate and legal tax loopholes to be able to, again, pay the legal minimum. If you've been looking for a way to reduce your taxes as much as 30%, today's episode is going to be for you. Stay with us. Again, we'll give you some very tactical advice on how you can lower your taxes this tax season. So the big question is this: how do those of us in the real estate industry with crazy amounts of ambition, how do we think bigger than the building of our own empires? How do we simultaneously seek success and significance, income and impact? My name is Justin Stoddard, and this is the Think Bigger Real Estate Show. All right, welcome back, everybody. Again, excited to be with you. I have two very important guests with me here today that I'll introduce here in just a second. But again, I just want to thank you for attending. And mostly, I want you to know that if you listen very carefully, this could be an extremely valuable episode for you, because a few very simple tax strategies can go a long way. And you may even decide that the tax professionals that you've surrounded yourself with are causing you to miss out on important ways in which you can lower your tax bill. So let me bring to the table again a great husband and wife team, Eric and Melissa Broughton. I might have mispronounced your last name. Broughton, please help correct me.
That's all right. Broughton, the various pronunciations. It's Broughton.
Broughton. I should have known. All right, you two. Thanks for coming on the show today. It's a pleasure to have you here. And let's dig in, guys. I know, again, you work with real estate professionals. Let me start with this question. What is one of the biggest mistakes that real estate agents make when it comes to their tax situations?
Oh, I want to answer.
Go ahead, love.
Waiting until the last minute and spending like a weekend marathon to gather all of their receipts and fling everything over to their taxpayer preparer and hope for a good result.
Tell us why that's the case.
Well, most of the real estate clients that I work with have quite a few accounts that they're using for their business. So they have, they probably have a checking account and multiple credit cards that they're using for their business. And they don't always have the best practices in making sure that they use business accounts for their business transactions. For a lot of them, it was maybe 2 years ago that they were, for newer agents at least, it was 2 years ago that they worked as a W-2 employee somewhere else. And now all of a sudden, they are flung into this world of being business owners. And it's such a unique position that real estate agents are in. And the way that they're spending their money for their business comes from so many sources that they're setting themselves up for failure. So I would say the biggest mistake is lack of preparation.
I love it. Yeah, just not enough time to respond, right? When you're in a hurry, you miss important details. Anything that you that you'd add to that, Eric? Like whether it be one or if there's another big mistake that people make, we'd love to hear it.
Not listing all of their assets that they bring to the company or that they get for the company as their business grows and develops. If you previously owned something and you bring it to the company, that's an asset that you're putting into your company. So therefore you need to put that on your tax preparation, and then having it be a last minute thing, it's terrible. You know what? Just file the extension. You got a tax preparer. If they're willing to work with you on everything, just file the extension, buy yourself at least another 30 days to add on to the fury of the weekend that you just had in putting together your tax data for your tax preparer. Just invest more in your taxes because it's very important to your business. Your taxes is what you owe to the federal government or state agencies after the year is done. Do you want to pay them more, or do you want to pay them just what you owe? And that's kind of where this comes into is better record keeping reduces how much you're going to end up paying. And that's important.
You guys just simplified that in a tremendous way. Is it like the more time you invest in this, the more accurate it's going to be, right? And I think And you mentioned something interesting there, Eric, is that there's certain assets that real estate agents bring to the table that they're maybe not accounting for. What are some of the ones that that you see? And Melissa, I'll bring you back as well. What are assets that real estate agents bring to the table that they're not including in their taxes?
Oh my gosh, I think so many of them decide based upon information that who knows where they're hearing it, but they decide that the majority of things that they're spending their money on, that they can't count those. So you have somebody that's earned six figures in commissions, and somehow they've been told. I talked to somebody on Friday who she had been told that she couldn't write off her mileage. That it just doesn't even make sense. Who knows where she heard it from? Who knows where that person even heard it from? But it's just these little tidbits of misinformation. And Eric will joke because he'll call it a Google education. And there's certainly great information that's out there on the internet, right? But there's also a lot of information where you should still be going to a trusted professional and be, and be asking, how does this affect me, right? So it's just, the mad dash at the end will never be the best thing for you.
Now, Melissa, you had mentioned something that the tax code is rigged, not in your favor, right?
Right.
Talk us through that a little bit, because I really enjoy your perspective on that. Is that because it's changing so frequently that nobody can keep up, right? And so, talk us through how that becomes quite expensive for people to not keep up, and although they shouldn't spend all their time trying to figure it out, maybe what should they do?
So I think that especially in the real estate industry, there are a lot of professionals that are incredibly intelligent, and they say, I am going to go at it on my own for taxes, and I am going to use, a common program. I don't want to get anybody in trouble by saying a name, but, I'm going to use a common program. Like TurboTax or H&R Block has one. There's a lot of different tax software programs, and they assume that program is going to guide them through to do their taxes, and it will, but it is certainly not going to do anything to maximize your taxes. And it's not going to push you as the, small business owner to look for deductions that you could be missing. It is crazy to me, and Eric maybe will be able to dive into this a little bit more, but it's crazy to me how many agents who are far over the six-figure mark, they're making not $100,000, but $2 or $3 or $500,000 in commissions, and they're still running their business as a Schedule C. So they're actually getting penalized by quite a lot because nobody guided them to become a corporation, or they don't understand why they became a corporation if maybe they did get a little bit of information. And that's a small one. That's a really small one. So
Eric, what would you add to that? And again, as you're thinking about that, I want to just make the comparison that if you're a real estate agent, would you advise a close family member to sell their own home? Like, the answer is no. If you hire a professional, you'll get a return on investment of that money invested in that, right? There's all kinds of things that you don't know as an average consumer when it comes to selling your own home. Like, hire a professional, and yet we go out and we do our own taxes, right? Like, it's quite ironic. So, Eric, what would you add to that?
Here, the irony of it is that the IRS is a federal institution, and its one job is to collect funds from the U.S. citizen. And in that regards, they're more than happy to say that you didn't pay enough in taxes, that you can't take this deduction, that you forgot to add this on your tax return. And they're willing to not only do that, but also to penalize you and add interest on that penalty. Here's what they're not willing to do. They're not willing to educate you on what you can do to reduce your taxes. So the IRS is not there to provide you as a means or a vehicle to do your taxes and pay the least amount. The IRS actually wants you to pay the most as possible, right? They don't have any qualms about saying that you filed your taxes, you didn't pay us enough, now we want more, and we're going to reduce the deductions that you did because you made us go through your tax return and we found that you did things in error. Then you're like, holy smokes, how does this work? Well, it doesn't work in your favor unless you have someone that has an understanding of how to dot the I's and cross the T's. Having
That is-
someone that's on your side like that is one of the most important things to do.
I'll tell you, that's really, really well said. Is that, yeah, they have massive agency and they've hired, I don't know how many thousands of more people. In order-
87,000 new IRS individuals in varying points of either frontline or management or support structure. But that's a lot of people. I don't know where the IRS is going to hire 87,000 people, in a 2-year or 4-year span quickly to the federal government, but they say they're going to.
Well, and all of those are designed to get more taxes from you, not less, right? They're not adding those people, like they're not adding those people so that they can be sure that you don't overpay your taxes, right? They're only adding those people to find ways to get more taxes from you. So I'm going to take just a quick second here and thank our sponsor. Give me just a sec here and we'll cue this up. All right, let's take just a minute and thank the sponsor of today's episode, Pro Insight. Now, you might be asking, who is Pro Insight? Let me explain it this way. Is that several years ago, I authored a book called The Upstream Model, which teaches professionals how to scale a warm market business through the networks of other professionals. Pro Insight is now making that process super easy. You see, in communities across the country, there are professionals like you who are highly skilled and relationship-based. You want to grow your business by referral. Yet sometimes your sphere does not keep up with your ambition. You see, we've identified over 20 industries who all have a relationship with a property owner. When you connect to these other professionals, it's as if you are scaling the size of your sphere through the networks of these other professionals. So what we do is we connect these professionals on the Pro Insight platform, and here we enable collaboration. The result is you get consistent introductions to ideal clients from other professionals, including from a highly vetted national relocation network, as well as from your local professional network. Case in point, one of our members out of Oregon City, Oregon, in just 4 months on the platform, she experienced 4 new transactions from her local network and 2 incoming relocation referrals, totaling $5.1 million in volume. Additionally, she's placed 6 outgoing referrals, resulting in nearly $15,000 of additional referral revenue. Now, if you have interest in seeing if you qualify to be on the Pro Insight platform and receive similar exclusive referrals from other professionals, just scan this QR code if you're watching the live broadcast, or if you're just listening to the podcast, go to proinsight.info/network. It's a very simple process. We look forward to seeing if you're the right fit. And again, big thanks to Pro Insight for sponsoring today's podcast. All right. So let's get into this concept now of, as professionals who collaborate together, right? We just heard a little bit from our sponsor. You guys obviously work closely with real estate agents. How common is it for a real estate agent when they're referring you to their clients, right? Is it common for them to say, let's the 3 of us hop on a quick Zoom call? And if that happens and they're making that warm introduction, or let's say, for example, that with a client, you're collaborating with a real estate agent, maybe a wealth manager, maybe an insurance, like you're having conversations with other professionals. Let's start with this question. Does that make your job easier when you know the bigger financial picture of your clients?
No, I don't necessarily need to know the bigger financial picture of my clients. I need to know their business structure, right? Because whether they make $10,000 or they make $10 million, I need to know how the business is structured so that I can best prepare my mindset to take advantage of the tax code for their business structure. If they're a sole proprietor and they've got 10 million in revenue, it's a much different viewpoint than if they are an S corporation with 10 million in revenue. But it does give me a good idea when I have an idea as to multiple revenue streams, right? So if they own a business, but they also have a cash-based, maybe they own some laundromats, right? And that's not in a corporation's a side thing. Maybe they have half a dozen doors that they're renting. That's a completely different line of their revenue stream that might be disconnected from their real estate business by itself. So having an overall picture, yes, that is necessary. But having a better idea as to how they've structured their business, that's kind of the first keystone to developing a really good tax strategy.
So the more complex their situation, then this collaboration that you're talking about, or that I mentioned, becomes more and more valuable. It sounds like, because there's more pieces that are incoming to the situation, and you understanding it better. You know, I've consulted with a number of clients who say that they learn of really good tax advice after the opportunity has already passed, right? Like the way they purchased a property, the way they sold a property. I see you laughing, Eric, because I'm assuming that you've had that situation. You're like, I wish you would have called me. I really could have saved you a lot of money there.
Or I have a client saying, you know what, I don't know why I didn't call you before I made this investment decision. I said, you know, if you actually, you were looking at 3 properties and one of them was in a specific depressed economic area. And if you would have invested in that one, there would have been much more long-range tax benefits to you than if you'd have taken the same amount of money and put it in 2 blocks away that was in a different economic area. So maybe we should have had that conversation. But so yes, that is something that has occurred. You know, loop in your tax person when you are making major financial investments and business decisions, because your tax person, their focus is on taxes. So their advice for your business is going to be tax related. If you're looking at designing the home, you're not going to go to your tax guy. You're going to go to a designer. So reach out to multiple people that are in your orbit to ask them, hey, I'm doing this as an investment. It's a large deal or it's a big deal. What do you recommend? Well, the designer is going to say this. Your tax person should say this. Your attorney should say this. Those that also invest in real estate circles along with you should then be able to say this is what you should be doing. And then you take all of that information together and you make a good, educated business decision.
I like it. I do think that many people look at their tax person as a tax preparer. I know, Melissa, you and I have spoken about this concept of having not just tax preparers, but really a tax advisor in your world. And talk to us a little bit about maybe how that's valuable for people to think of their tax person not just once a year, but maybe throughout the year.
So one of the things when we started our firm that we really were aware of that we wanted to do different is we wanted to offer kind of a boutique tax firm experience. And what I mean is that we wanted to communicate with our clients, with our tax clients, more than once a year. We didn't want to wait until it was, like you said, it was too late. That's a horrible conversation to be able to have with, or to have, not to be able to have with the client, of saying, oh, well, if you would have talked to me in November, or if you would have talked to me before you did something, then you could have done this and this. We don't want to have that conversation. We want to be talking to our clients throughout the year to see what's going on, to see what decisions are facing them. And you know, when those appointments are booked, so Eric does quarterly check-in calls with his tax strategy clients, and it kind of puts him in front of his clients so that he's there before the time has passed for them to miss out on things, right? So he can kind of walk them through different scenarios, different things that he has ideas on, different things they may want to, you know, put into place, but also so that they can communicate to him what's going on, things that they may have forgotten about. I mean, we've had clients that have used other tax preparers that have sold properties and forgot to tell their tax preparers because they only talk to, and I say that almost ironically, they only communicate with that tax preparer once a year after the year has passed, and people forget about things. So we find that the more communicating more makes a huge difference. And that is one of the things that I would say makes a huge difference for our clients.
Yeah. Eric, anything you want to add to that?
Yeah, that particular, one of those particular events that occurred, the client forgot that he had sold a adjunct commercial space to one of his properties, and 2 years later he goes, wait a second, and he got a letter in the mail, and then he reached out to me. He says, "Can you fix this?" And I said, "Well, I certainly can, but man, that one's a doozy." Ended up being around $150,000 mistake that prevented, as if to a degree prevented, if you would have just reached out to his tax person in advance or had a relationship with his tax person. If you've got a CPA or an accountant or a tax preparer, one of the questions should be, how often do you talk with them outside of tax season? Mm-hmm. And if the answer is 0, or you're like, well, I mean, I asked them something and maybe I got a response, maybe I didn't, that's not enough communication with the professional that you're trying to have a relationship with. Because if you don't have a relationship with your tax preparer, what reason do they have to help you out for things out of the blue, or to remind you about something, or to send you an email saying, hey, Congress just added a new law onto the books, and it has 3 different tax provisions that I think would be beneficial to you. Here you go. I am adding more value to my clients by paying attention to what's going on in the political arena, and then I take it to them, rather than them having to find out through someone else that they do business with, rather than them getting an education through DuckDuckGo or through Goggle, right? Other avenues, I'm providing them the education because I'm the professional. I'm getting that education out to them. And I'm also maybe giving them ideas on how to do business development that would have a tax benefit, how to retain employees, how to expand business and set up your new contracts. How to maybe reach out and want to expand into social media, and how that could have a tax benefit as well. So these are avenues that I'll reach out to my clients about through email blasts and things like that. But also when I first talk to them and I send them a tax organizer, it's going to list a lot of things that they go, wait, what does this mean? What is this about? And I'm more than happy to provide them with a little bit more education for their tax filing, which could account for anywhere between 30% to 45% of their income stream then goes out to taxes. Well, I'm going to help you protect that amount. I'm going to help you reduce it as much as possible through every legal means that is at your disposal for your business structure and for your tax case.
Yeah, I love it. Well, one of the things that I've found is that great tax professionals like you, and you guys have already said it, is that the more contact that you have with people during the year, what we train on our, on the Pro Insight platform is for tax professionals to ask the question, not just, did you buy or sell any property in the past year, but do you anticipate buying or selling any property in the upcoming year? And when clients are faced with that question, a couple things happen. Number one, they're able to avoid some of those heartaches, like the $150,000 heartache that you just described, Eric. Right now, that's maybe a bit of a severe one, but it also what it does is it allows for the tax professional to even identify clients who are going to be making moves and may need a better professional. Right, a great follow-up question for any tax professionals that are listening out there. After they say, yeah, we are anticipating moving, do you have a real estate professional who's a 9 or a 10 that you're planning on using? And if the answer is no, would you be open to meeting a 9 or a 10? Yes, then obviously that's an easy referral to make an endorsed introduction to somebody that that you work closely with. So any final words from either of you about ways in which not tax professionals, but real estate professionals can really be prepared as we come hot and heavy into this year's tax season, and of course, then looking out to future tax seasons?
I think the biggest recommendation that I would give is, think of your tax professional as a tool in your toolbox, right? And that tool, I hate to use that word, but that tool should be somebody that you feel that you can call, that you feel you can communicate with, that you feel explains things to you on a level that you understand, and that is working alongside you to help preserve your wealth.
Love it. Love it.
Or alternately, instead of calling them a tool, we could just call them a resource. I
Resource.
prefer to be called a resource. Reach out to your resource, because there's probably things a lot of real estate agents file as a sole proprietor, and they don't realize how many deductions they still have available to them that's outside of the normal home, vehicle, advertising, maybe some meals on there. There's more to be had. Reach out to your tax professional, find out what those more to be had are. And if you have a question about something, reach out to professionals like us. Go to busybeeadvisors.com, go to ineedbookkeeping.com, get your records in order, get your things set up so that you can prepare yourself for not only this coming tax season, but to set yourself up for success in the tax seasons that are going to be coming up, right? Because this is an annual thing. This is not a one and done. You got to keep doing this every year. Just like you got to keep putting yourself out there and finding new clients to sign on to sell their properties. You also need to be out there advertising yourself. Let's get your books in order as well.
I love it, guys.
That way you're ready for the next year.
Great insight. Now, you had mentioned that you had a kind of a gift for the audience. I think it's 3 strategies for reducing your taxes. We'll be sure and add that to the show notes for any that are interested. You'll be able to find that at proinsight.com/resources. You'll see this episode as early as tomorrow. And we'll put that a link to that, and also on the Facebook live stream here. So appreciate you guys being willing to share some initial insight. And again, busybeeadvisors.com is where you can go to learn more about these fantastic professionals that, by the way, I just have to mention something, right? Real estate agents are famous for marketing during lower times and not marketing during busy times. And I got to hand it to you guys right in the middle of tax season. Here we are, right? Like on the verge of March, on the cusp of March. And here you are still doing consistent activities to market your business. Like, well done. There are very few CPAs out there, tax professionals out there who would be doing this. And you're a great example to everybody listening that you ought to be getting the word out to other people, marketing your business, regardless of whether you're busy or not. That way you don't have to be on that roller coaster of highs and lows. You guys are an example, model citizens for all of us. So thank you for that.
Thank you.
Well, we appreciate that. Thank you so much, Justin.
Such a pleasure. Now, and my final request of everybody listening here today are these 3 simple words, and they are: go think bigger. And thanks to these wonderful 2 who helped us see how we can think bigger and not give it all away to the government. Thanks, you 2. We'll talk to you soon.
Cheers.
Thanks, Justin.
Big thinkers, you and I both know that listening to a podcast is not the final step in becoming a big thinker. That is why I have one more invitation for you to help you expedite this process of transformation. It will only take you a few seconds. I want you to open your favorite social media app, find me, and send me a DM sharing with me what you loved most about this episode. Doing so will help you take one more step in taking big ideas